I do agree with the idea, and I think that ultimately it's anchored in the laws of thermodynamics. The whole premise that is required for the universe to function is conservation of energy. First you have to have the existence of energy, and then you have to have the conservation of energy. And in the Bible, the first thing we remember is God says, "Let there be light." Right. That so everything starts with the deity pointing out that in the absence of light, which is energy, there is no life.
Michael Saylor has made it evident that he thinks energy is crucial and that all significant resources, including oil and gas, use power. Bitcoin is a very genuine asset, even though detractors may refer to it as false money, worse than tulip bulbs, or a greater fool plan. The approximate 19,000 cryptocurrencies now in use have a market valuation of $1 trillion, equal to Italy's GDP, the 8th largest economy in the world. Even though you might not be able to pay with Bitcoin at the local convenience store to buy a loaf of bread, many investors are investing a lot of their hard-earned cash into cryptocurrencies. However, many economists and analysts think that because cryptocurrencies consume a lot of energy, they have a dirty little secret that is very important to the real world. The most significant cryptocurrency in the world, Bitcoin, is now expected to use 150 terawatt hours of electricity yearly, equivalent to more than the population of Argentina, which is 45 million people. Additionally, the production of that energy contributes significantly to global air pollution and climate change, releasing about 65 megatons of carbon dioxide into the atmosphere each year, similar to Greece's emissions. Since there is a lot of negativity around Bitcoin and crypto's energy consumption, let's ask Michael if it is possible to generate digital money or Bitcoin without energy consumption.
We only have discovered one way that is settled and universally agreed upon to create digital energy or a digital commodity. And the one way is proof of work. I take electricity and I run it through some kind of hashing algorithm. So you could do it with SHA-256. I mean, you could probably come up with another hashing algorithm. You can come up with certain other algorithms that do it, but I'm modulating electricity to do work. I'd say Bitcoin's an example of the creation of a digital commodity. As I said before, if you took away the difficulty adjustment and you took away the halvings, you could have a commodity more so than a scarcity. The brilliance of Bitcoin is not just that it's a digital commodity, but that it's a digital scarcity. If I uncap the amount of Bitcoin, or I just let you continue to create it, well, I've got a digital commodity. Well, I mean, oil is a physical commodity, and so it's uncapped. So, I mean, the reason that oil is not necessarily as good an investment as Bitcoin over the long term is A, it's not digital. And so I can't carry $10 billion worth of oil on a USB stick, right? And I can carry $10 billion worth of Bitcoin. And the second reason is it's not a scarcity. 100 oil miners or oil refiners can produce 100 times as much as one. Whereas with Bitcoin, 100 Bitcoin miners can't produce any more Bitcoin than one Bitcoin miner can produce. So oil's not, it's not a scarcity, it's a commodity, and it's a physical commodity. Bitcoin's a digital commodity. Now, other people have launched, other groups have launched crypto networks that use proof of work. Ethereum was a proof of work network. You've got the Bitcoin forks, and a handful of other cryptos that are proof of work networks. That might make them an ersatz or an architectural digital commodity. It doesn't guarantee their digital scarcity. Like, for example, Dogecoin keeps increasing its supply, right? So it's not a scarcity. It's a proof of work protocol that creates more and more and more, right? So it's a commodity in the same way that someone creates more silver or more soybeans every year, right?
Mhm.
Saylor doesn't seem to believe it's possible. However, Saylor has stated that other things take up more energy than Bitcoin, so let's explore it to discover the other side of the argument. According to some reports, despite significant advancements in energy efficiency and a more diverse and sustainable energy mix, Bitcoin has seen a 41% increase in energy consumption yearly. However, there are worries that the increase may lead to regulatory restrictions on cryptocurrency mining. The information was compiled in a Q3 2022 report by the Bitcoin Mining Council (BMC), which comprises 51 of the world's most significant Bitcoin mining operations. According to the BMC and the report, Bitcoin mining uses 0.16% of the energy produced globally, which is an infinitesimal quantity of global energy, and only slightly more than what is used by video games. Additionally, the BMC found the carbon emissions from Bitcoin mining to be negligible at 0.1% of global emissions. Despite fewer blocks being created and downward price pressure, the network's hash rate climbed by 73% year over year and 8.34% in Q3 2022, which coincides with an increase in Bitcoin energy usage. Glassnode, a company that analyzes blockchain data, claims that the increase in hash rate is caused by miners with better balance sheets having a higher part of the network's hash power or introducing more efficient mining hardware. Although the survey also asserted that the efficiency of Bitcoin mining has grown by 23% year on year and 5,814% over the previous 8 years, additional increases in total energy consumption may anger regulators looking into the matter. Michael Saylor has also shared this report on his Twitter account, which you can see on your screen. As both sides are clear now, we can hear what Michael has to say on how he will distinguish proof of stake from proof of work.
The problem with proof of stake is that proof of stake is a simulation of the universe, or an imaginary universe. You're imagining energy, and you're creating a virtual machine. They literally call it a virtual machine with virtual energy in the form of virtual tokens for virtual security, all manifested in software code. Someone has to write that software code. And if you write that software code and you keep changing it over and over and over again, then you've got this problem, which is how can I continually change the software without someone having influence over the software?
Yeah.
You, in essence, have created a software company. So with Ethereum, the Ethereum Foundation is a software company. There's a lot of software engineers that have to write the software. They have to be paid. Someone has to budget for the payment of the engineers. The only hope you have of something based on software becoming a commodity is you write the software once, you gift it to the world, and then you stop changing it, and you distribute it across 20, 30, 50, 100, 1,000 different parties. And if everybody can run the software, and if there's no need to change it, and if no one organization controls it, now it becomes sufficiently decentralized. So you see, that's the fact pattern with Bitcoin. The reason it's important for Bitcoin to be simple is the software, the protocol needed to be substantially finished when it was first released by January 3rd, 2009. They kind of needed to have it done. They couldn't keep changing the protocol because otherwise you end up with a software company. So
Michael has made it clear why he likes proof of work over proof of stake, and Ethereum's performance is still hotly contested since it switched to proof of stake, which not all analysts found appealing. Now, before hearing more from Michael about his future Bitcoin price prediction, let's see how much Bitcoin Tesla is still holding as their Q3 report is out. The electric vehicle manufacturer Tesla made no adjustments to its Bitcoin holdings in the third quarter of 2022, according to its most recent quarterly filings, after doing so in the second quarter. The value of these digital holdings was $218 million at the end of the second quarter, and it remained at that level after the third. Bitcoin continues to trade around $20,000 throughout the past 2 quarters, maintaining the company's overall value.
A person that's a passionate investor will own them because they're trophy assets that they simply wish to own, to say they own them for their own personal purposes. And the rest of the monetary energy really ought to be in a Bitcoin network because it's a pure index of the economy without counterparty risk, without execution risk, without credit risk, without debasement and political risk, without the tax risk, et cetera, and the political risk. That's why that makes sense. And that means that the top is more than 100 million. More than 100 trillion. It's somewhere between 100 trillion, 300 trillion in today's money.
What do you guys think of all this? Please share any thoughts in the comments below. They always generate interesting dialogue. If you found this video interesting or helpful, don't forget to like and subscribe to our channel and hit that bell icon so you don't miss any of our future uploads. And while you're still here, click to watch one of these two videos appearing on your screen right now. Each one is a value-packed dive into some of the hottest topics in crypto. Thanks for watching, until next time.